Welcome back to Trading Wars. Today's free educational content will be looking at Wicks as promised on Twitter. So if you're ready, let's step into the war zone. All right, so starting off, we're going to talk about what are Wicks, what do they mean, what are the psychology and bias behind them. So a wick is essentially when the price tries to move in a certain direction, but immediately gets reversed. Okay, so let's look at some of these wicks that I have highlighted here and let's talk about what happened. So this wick here means that on this candle, the price was up here at one point. But before this candle closed, the seller stepped in and pushed this price back down. Here's an example of the opposite. So at one point in this candle, the price was all the way down here, but before the candle closed, the buyer stepped in and pushed this price back up. So why is that important? Why does that mean anything? Well, wicks represent traps. They represent when people were trying to buy the breakout or short the breakout and prices reversing on them. So in this example here, it's clear that at the open, the bulls wanted to break through this high and continue moving in this in the bullish direction. However, what happened was they bought the breakout and immediately got shut down. And this is why we have this little move down, right? And here's an example of bulls buying the breakout, and as soon as they bought the breakout, getting shut down by the shorts who sold, reversing, causing a big wick, and then we have this nice little drop here. Okay, so wicks essentially are traps. They are showing you when one side wanted to move higher or lower but got reversed on. So it's very important in the market because when combined with other key tools or key levels, wicks can be very, very strong and effective trading strategy. But not all wicks are created equal. So in general, we want to see, if we're looking to short, we want to see the wick at either a Fibonacci level or previous resistance, or at the high, the extreme point on the chart. So these two wicks short are good wicks because they're at the highest point on the chart at that time, right? Because just normal regular trading logic, if you want to short, you want to sell high and buy low. If you want to go long, like in this case, this wick is a good wick versus all of these wicks because this wick is close to the low, right? So this is a good wick to buy low and sell high, okay? The other thing that I say why not all wicks are created equal, when it comes to a day trading context, the longer you go in the day, the more choppier things become and the more wicks you'll see. I prefer to only focus on the wicks that have confluence, meaning they're at the extreme points or there's another factor on why it's a good trade. So let's use these wicks as an example. So this wick was September 4th. The market opened at 9:30. Right here, we had the buyers trying to push higher, immediately getting shut down. So this is a great wick indicating trapped bulls. And then you can see the big drop we have here on the short. Now we can see as we're approaching the low of this day, we have wicks in this area, 1 wick, 2 wick, and 3 wicks. So these wicks are a good indication that, hey, this might be the low of the day. This might be where the bulls are buying or want to buy. And this is where the market reverses. So this wick here in particular is a great wick because it's very near the low of the day, right? So it's a good buying opportunity. It shows that the shorts try to short here and got immediately reversed on. And this wick here is a good short wick. Why? Because if we add a confluence factor, we take the Fibonacci from the low to the high, we can see that that wick is right at the 50% short. So that's why that is a good wick. So the wicks are not created equal, but if you use a wick in combination with another factor, they can be very, very powerful and very profitable. So how do you actually trade them? So there's 2 ways to trade wicks. I'm going to start off with the very beginner approach. And then the next item that I'm going to show you guys is a little bit of a secret. It's an advanced style that is very high risk, high reward. So in general, what we can do if we want to be passive is, hey, if we identify a wick, we can short 1 penny below the low and a stop above the wick, right? If we want to go long, we can buy 1 penny above the high with a stop below the wick, right? So we could just bracket the candle, the wick candle. We bracket it, meaning we are entering when the candle high or low breaks with a stop loss on the opposing side. And the more aggressive way of trading fibs, which a lot of you are trading wicks, sorry, which a lot of you are probably not familiar with, is taking the hold half or the Fibonacci of that candle as a better entry. Okay, so what do I mean by that? So let's start off with this candle here. Okay, so let's say we want to use this candle as a short because this is the high of the day at the time and it's a long wick. We know buyers are trapped. So what we can do is we can take the Fibonacci from the high to the low, like so. And what we can do here is we can say, okay, I want to short this candle, but I want to get in ahead of time. I want a better risk. So instead of shorting below the low, we can short at any one of these fibs. So we could do the 382, we could do the 50, we could do 236, depending on how aggressive you want to get. But in general, what we see is the candle, especially if it's a big bar like this, the second candle will fill about half of it. So instead of shorting below here, we can short here with the stop loss here, right? So instead of having, this will allow us to get profits quicker because we are shorting here versus here, right? So this is an advanced strategy, and I'm going to show you guys some more examples. And sometimes the wick will be so powerful that there will be a very small opportunity to get onto the train. So let's look at this one as an example. So if we wanted to go long here, instead of buying the breakout, we wanted to get fill. You can see it just barely touches the 382 and it just explodes. But, when you take that next candle closer to the wick, you have a better risk to reward, right? And then let me show you guys some more examples here. And then we'll wrap this video up. So again, first 5-minute bar, we had a long wick, buyers wanted to buy, right? So what happens on the next bar? We have a trap. This is a clear trap. This wick broke through. Buyers are trapped. They want to buy, and immediately they get shut down. So we can either just short below the low of this bar with a stop above the high and then take it for a quick scalp. Or we can say, I want a better entry. I'm going to take the fib from the high to the low like so. And right here is the 50. So you have a short at the 50 with a stop above the high, and then you get a better entry and you get more profits. All right. Same thing over here, a wick at the high of the day. What can we do? We can take the fib like so, and we can say, okay, I'm going to get filled at the 50, stop above here, right? And as long as your stop's in the right place, you're able to take a nice trade here. And then we can do the same thing here. We can say, okay, nice long wick near the low of the day. I'm going to enter on a pullback here. 50,618 are trading right there, so it's a little bit hard to see. And depending on where your stop is, if your stop was right here, you would have probably got poked out. But if you're playing off the low of the day, you have your stop here at the low of the day, right? I like to keep my stops at the extreme level. So in this case, these are the high of the days. So it makes sense to have your stop there, right? So that's Wicks in a nutshell. So to recap again, wicks are important because it represents one side being trapped. One side tried to buy the breakout and they're getting shut down. You need to combine the wicks with another factor, whether it's Fibonacci or Bollinger Bands or high or low of the day, support and resistance, to make it really work. And at the end of the day, there's two ways to enter into wicks, either taking the candle itself or getting a better entry near the 50% retracement of that candle. All right. So I hope this helps and makes sense. This is a little bit of an advanced style of trading. Whatever you do, guys, you have to understand that everything works in the market, just not all the time. So wicks are a great strategy, but it's not going to work every single day. But if you can win 3 out of the 5 days or 4 out of 5 days and have great risk to reward, you're going to make a lot of money. So don't try to find something that is 100% accurate, because that doesn't exist. Take something you like. If you like wick style of trading, then apply that and be consistent with it, okay? So I hope this video helped. Please comment, like, subscribe. Check me out on Twitter. As always, I'm here to help educate and help you all achieve financial freedom. All right? Enjoy the rest of your day. And I'm going to have a Zoom call later to elaborate a little bit more on this topic. Sign up will be on the Twitter. Thank you very much. Take care.